Everybody, morning. So I did a thing. Did the thing, I guess you might say, and unleashed the Kraken. I named my AI agent running on Apple Mac Studio Kraken, and it's out there doing things. It's kind of funny. I told it to learn Elliott wave theory, and it was like, all right, I learned it. I was like, are you an expert? He's like, yeah. I started asking a question. He goes, wait, give me a few days to catch up to your knowledge of Elliott wave theory. I was like, oh, God, I love it. Love a duck. Anyway, it was cracking me up. So I've got that thing cranking out, trying to learn what it is I do, trying to help me make better stuff. Yeah, saw X was down. Try to load it up and just give me a black page. I got alerts on my phone though, so I don't know. It was funny. I got an alert on my phone. I went to pop up X and on the computer because I was sitting at the computer, and I was like, "Well, that's weird. It won't load." Anyway, let's talk crypto, shall we? It was interesting. It's like an interesting thing. We talked about how much years back, I guess, that the whole thing was like how much energy is going to be burned on crypto, and now it's, oh my gosh, look how much energy is going to be burned on AI. And it's interesting, I guess you might say. So welcome, my magnificent monsters. Set my drink out of the way here. Let's turn it around. And got the purple grape one this morning. And grab your caffeine of choice. Me. Get that fresh monster right there. And that good sweet zero sugar mix of chemicals, I guess you might say. Anyway, I don't like the hot liquid, so coffee just not my bag, baby. And you can say, well, just drink iced coffee, and that just I don't know. It's like the aversion to the hot liquid thing just carries over in the smell and the flavor of coffee. I just can't do it. Something about the tannins too. Coffee and tea. I don't know. Anyway, so we're about to talk about a story so perfectly, beautifully absurd. It can only happen in the world of high finance and even the higher stakes energy grids. Picture this. It's January 2026. A monster of a winter storm is ripping through Texas. The grid is screaming for mercy, buckling under the strain of millions of people cranking up their heaters just to keep from turning into human popsicles. The lights are flickering. The memory of the 2021 disaster that nearly killed the Texas grid. Everybody was having flashbacks to that memory of that disaster. I mean, it actually left quite the disaster. $200 billion of damage to the grid. I mean, we're only here 5 short years later. That damage is fresh in everybody's mind. And in the background, we had a silent hero at work, a quiet savior keeping the lights on. Who was the hero? A team of grizzled, hard hat wearing energy workers, a benevolent billionaire philanthropist. No, none of that stuff. It was actually a bunch of nerds in warehouses running computers that solve fake internet puzzles for fake internet money. That's right. We're talking about Bitcoin miners, the very same group of digital demons that every mainstream media outlet and every politician with a microphone loves to blame for boiling the oceans dry. I mean, I've yet to see a dry ocean. Turns out that while the world was busy writing the obituaries for the planet, courtesy of Bitcoin, these so-called villains were building one of the most useful things that could actually save the increasingly fragile power grid. And in the process, they stumbled into one of the most brilliant asymmetric investment opportunities I've run across. This isn't just a story about magic internet money saving the day. It's a story about power, real power, the kind that keeps your lights on, and it's a story about good old-fashioned corporate street fight. Maybe a David and Goliath type showdown for an $18 billion prize on the other side. So, the teams here. You have scrappy, decentralized army of Bitcoin miners. The other side, one of the most powerful, folksy, and utterly ruthless investors in American history, Warren Buffett. So let's back up. Let's talk about what happened in 2021. All right, there was a major winter storm came through Texas, a big freeze. Texas was desperate for a solution after that storm. The grid, ERCOT, kind of a national embarrassment. So, in strolls Berkshire Hathaway Energy. It's a division of Buffett's empire. They come with a proposal, a very, very generous proposal. For, let's say, the low price of just a few tens of billions of dollars, they said, we're going to build you a fleet of shiny new natural gas peaker plants. These plants will sit around doing absolutely nothing, burning cash for upkeep, and just sitting there idle until you have an emergency. Then we can fire them up and save the day. You're welcome, Texas. Just a cool, couple $10 billion. No big deal, right? Classic utility playbook. Build some expensive centralized infrastructure, lock in guaranteed profits for decades, and pass the bill off to you. It's a beautiful business model if you can work the deal. Berkshire Hathaway's energy lobbyists, all 8 of them, descended on Austin with over $300,000 of cheese to pass out to politicians to make sure that they were the ones that secured this deal. But then a twist in the story, a monkey wrench in the works. The new CEO of ERCOT, a guy named Brad Jones, who bought in to he was brought in to clean up this mess. He got hired to fix it. He noticed something strange about this whole deal. The whole new type of there's actually a new type of power consumer that was in Texas. They'd come to Texas from China. And in the infinite wisdom, China banned them. They were Bitcoin miners. And these weren't like factories. See, electricity isn't like water in a bucket. It's a constant flow. The grid has to balance. Has to balance perfectly with the production and the demand. You have to balance this whole thing perfectly every second of every day. Too much demand and not enough supply. Brownouts and blackouts. The old way to fix this was to have a backup supply sitting there. Expensive peaker plants. But what if instead you could have backup demand? What if you had massive power consumers that you could simply pay to turn off when you had peak demand? Interesting idea. That's the magic of Bitcoin mining there. For a steel mill or an AI data center, turning off is not going to work. It's pretty much a disaster to the business. It's downtime, lost data, operational chaos. For a Bitcoin miner, it could be a scheduled coffee break. Literally, they can be turned off and on without any real consequences. In fact, they kind of plan maintenance for the systems around shutdowns. So Brad Jones ran the numbers and he realized that he didn't actually need Berkshire's $10 billion, which actually turned into $18 billion boondoggle. He had a fleet of decentralized instant off switches across the state of Texas already installed. The miners could suck up all the excess renewable energy when the sun was shining and the wind was blowing, and the second that the grid was stressed out, they could shut down, releasing that power back to the people who actually need it to heat their homes. they actually became the grid's shock absorber, a giant distributed battery of sorts that, instead of just sitting there costing money, actually makes money by mining Bitcoin. I mean, it's kind of the ultimate have your cake and eat it too scenario. And it actually worked. During the January storm, the Bitcoin hash rate dropped by a third. That freed up 1.1 gigawatts of power, enough for about 200,000 homes. And that was just, available back to the grid instantly. The lights stayed on. The miners, they actually got a little incentive for turning them off. They received what's called curtailment credit on their bill. This is the investment framework that I want you to burn your brains on. Think about it. Let's call it grid insurance. But unlike car insurance, which you pay for every month for the privilege of not going bankrupt if you wreck your car, this is insurance that, this is the type of insurance policy that pays you. These miners get paid by the grid to be on standby. And when they're not on standby, they're mining Bitcoin. So who are these players? Who's the direct winners here? The miners themselves. You got Riot. They're getting more and more into AI data center stuff, but they're still based right here in the United States. In Texas in 2024, they reported 15% of their electricity costs were covered by these grid curtailment payments. In 2025, they pulled in over $2 million in a single month just for the pleasure of turning off the machines. They're getting paid to not mine Bitcoin. It's kind of like a millennial dream. And we also have Mara. They took on a lot of debt, and I don't know if it's the best play, but it's the biggest public miner right now. They're not just a bet on the price of Bitcoin anymore, though. They're a bet on grid stability. They actually have power production capacity themselves. The more volatile our energy supply gets, thanks to the glorious, unpredictable nature of renewables, the more valuable these instant off switches can become. This kind of completely flips the script on the narrative, though. The narrative has been Bitcoin is dirty, energy wasting, parasite that just boils the oceans dry and burns all the extra power. The new narrative, though, the one that's backed by data and the CEO of ERCOT, the Texas Grid, is that Bitcoin is actually a missing piece of the puzzle that makes green energy work. It's kind of this funny contrarian play. Now, day to day, they actually, as renewables peak in their production and they actually have too much power, they're like, Bitcoin miners go hog wild. But then at night, when the sun quits shining, the wind quits blowing, the renewable energy is drying up, they actually pay these companies for curtailment. It's kind of wild. It's the ultimate contrarian play. Now, the indirect winners, it's the companies that build grid infrastructure for the future. The more data centers and miners that we have, the more you need to upgrade the substations, the transformers, the transmission lines. It's kind of a secular tailwind for boring old utility infrastructure companies that are suddenly the heart of this new AI and crypto revolution. And, of course, the big loser in the story, well, Warren Buffett didn't get that contract. Berkshire Hathaway Energy, well, that $18 billion, boondoggle of a payday evaporated because a bunch of crypto bros built a better, cheaper, more efficient solution. And you can kind of see why the lobbyists are still in Austin trying to get these politicians to regulate miners out of existence. They're trying to put the genie back in the bottle, but I think it's too late at this point. The model's kind of proven. The future, well, we're moving to a world where intermittent renewable energy is a big part of the grid, and we need a way to balance it out. Now, as we've heard Elon talk about, Tesla Energy Solutions is part of the solution. Big batteries, but they're expensive, and most of the time they just sit around doing nothing. Bitcoin miners are another part of the solution. They're actually a productive asset that doubles as a grid stabilizer. They have a base demand, and when we need the extra power, they can actually shut down part or all of the miners. So when you hear about talking heads on TV screaming about Bitcoin's energy use, I mean, just kind of smile. Let them panic. They're missing the bigger story here. They're looking at that caterpillar, calling it a worm, completely oblivious that a butterfly is actually under the surface. The investment angle here isn't just about the price of Bitcoin going up or down. It's about owning the picks and shovels of the new energy grid. I mean, the companies that get paid to provide stability in an unstable world, I mean, it's the revenue stream we don't really ever talk about for these Bitcoin miners. It's about betting on decentralization against old guard type monopolies like Berkshire Energy. I mean, it's kind of stuff you just can't make up. It's the kind of stuff that technology, politics, corporate titans, I mean, it's a whole mix, you know? And there's a clear path to making money if you have the wherewithal to stick with it. So keep your eyes on that hash rate. Watch ERCOT, and, you know, for gosh sakes, keep an eye on your risk. Because the quiet savior of the grid might just be one of the loudest things in your portfolio. Crypto is the most chaotic of all the things you could possibly trade. So be careful out there, for gosh sakes. For gosh darn sakes, be careful out there. Let's pop over. That's kind of the story I had for the day, talking about the grid chaos in January. It's interesting how the grid was more resilient all on the back of Bitcoin miners. So before we talk too much, I guess all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, and entertaining, not a recommendation to be buying or selling any financial instrument, including crypto, stocks, options, bonds, fortune, futures, treasuries, bonds. Don't. If you trade things, you might lose money. So be careful out there. If you need somebody to tell you what to do, they'll probably tell you to stay away from Bitcoin, or maybe small allocation if you really want to get into it. So be careful. Be careful, be careful. Now, we could sit here and talk crypto all day, and I mean, there's quite literally 34 million cryptos. I could talk for the rest of the year and not get through half of them. Not get through a third of them. There's 923 exchanges. There's no single price for Bitcoin. That blows a lot of people's minds. You pull this up, you look at the chart, it says this is Bitcoin, but if you go look at a different exchange, you're going to see a different price. You go pull up Coinbase, you see a different price than you see at Binance, then you see at Crypto.com, then you see at Robinhood, then you see it, you name it, then you see on TradingView. There's different prices all over the place. And it's all because there is no centralized control of Bitcoin. All the exchanges stand alone. It's a kind of a mind-bending concept for a lot of people. Works a lot like Forex. The exchange rate of dollars and euros, while it's quoted at something, if you go to the different exchanges, it's actually a different price. Same thing with Bitcoin. We can see this, in general, it's this price, but when we go jump in and actually look at the markets for Bitcoin, you can see all these different prices. Upbit has it up at 70,000. Binance has it at 68.4. But look at that, two different pairs. In Tether, it's that price. In USD Circle, it's that price. At the same exchange. That's the way Forex works. So it's all about supply and demand. You might be sitting there going, oh man, there's arbitrage opportunity. I could go load up at Binance and then take it over to Upbit and make $2,000 immediately. Except It's not quite that simple. And there's already bots and all sorts of things that take care of that. But there's still market inefficiencies in the price. So that's kind of the first rule of crypto, is that there's no centralized control of any of it. And you can say it's internet magic money, but it's really just what one person's willing to pay another person to obtain the Bitcoin. But isn't that really what all money, why all money has value? And it really, really can bend your mind when you think about it that way. What gives a paper dollar value? Oh, it's the full faith and credit of the United States. But why would you be willing to accept $1 from me or $100 bill from me? Because other people place value on that $100, right? You think that the $100 has value. And you say, well, whatever. Gold right now. I mean, why does gold have value? Because other people want to obtain it. Why do dollars have value? Because other people want to obtain them. Why does Bitcoin have value? Because other people want to obtain it. Why does Apple stock have value? Because other people want to obtain it. It's kind of the way everything in our world has value. And you say, well, it seems more like a Ponzi scheme and this, that, and the other, but that's how everything in our world derives value. And if you haven't really thought about it that way, maybe stop and kind of like look at it. Like, why does Ethereum have value? Now, interesting propositions here, though. Like dollars, US dollars have no cap, right? We could just make more on a whim. If we joke about Jerome Powell, the printer goes brr, they just print more money. More money in the system, more money all around, and that's why the value of the dollar has dropped off. It's like why the dollar today doesn't buy what it did before. We call it inflation, and that's exactly what it is. Putting more supply of the currency on the market is inflation. Bitcoin has inflation, but it's capped at 21 million. There's not going to be more. Now, Ethereum, on the other hand, has no cap on the supply. Infinite supply. Fundamentally, that makes it different. And you say, well, they're going through deflation right now. They're burning more than they're producing. That wasn't true last year. They were actually producing more than they were burning. So we're actually going through inflationary times. And these stable coins are tied to the dollar. You look at other coins like XRP. Everybody talks about it going to go to the moon, but the current circulating supply is 60% of the max. If they dump the other 40 billion coins on the market, what happens? Somebody controls that 40 billion. It may not be in the market, but in Solana, no cap. What gives it giant value? It's kind of interesting when you think about it. Like if you could just make more of something, if the algorithm that controls it just makes more, where does the value come from? And that's, Doge's big problem is 10,000 of those puppies come onto the market every few minutes. That's like 10,000 of them at 10 cents. That much money's got to get absorbed just to keep price stable. And an interesting one lately, Bitcoin Cash. This is a fork off of Bitcoin from several years back. And it's one of the best looking charts that I've seen in the crypto space. While crypto in general is just getting punched in the face, this chart is holding up amazingly well. You look at the Bitcoin chart, not Bitcoin dominance, but Bitcoin taking a big spill here. Retesting the breakout from 2021. We had trouble breaking out, went up, and we came back to back test it. Now, I've been a very big proponent of the fact nothing's really changed in the crypto space. A lot of people have had trouble with this. I've had so many people tell me, oh, you don't understand, the fundamental story has changed. We have, regulatory approval. We have this, we have that, we have all these things, but the real deal heart of it is the fact that the 4-year cycle is still intact until it's not. In the back of everybody's mind out there, even when I say everybody, is everybody that's been in crypto, at the back of everybody's mind is that maybe it is crypto winter. Maybe we're the 4-year cycle still intact. And that subconscious kind of feeling keeps the 4-year cycle intact, whether we sit there and actually believe it or not. We sit there and watch the price, and collectively, we're all taking small actions based on the fact that might still be crypto winter, might still be 4-year cycle. And that subconsciously makes it true. So right now we did this dip, and we're kind of chopping around in here. I actually drew this chart 2 weeks back. We kind of plunged down here a little bit lower than, at the time when I drew it, we had kind of stopped here, but we went ahead and pushed on down lower, which kind of said we might. And then I thought we would do some sort of rally through May, June, probably in a 3-wave type structure. So from now, mid-February here, through possibly May or June, we may see some upside price action. That upside price action could get up into the high 90s, even possibly as high as like 115,000. Probably not going to approach the prior high, though it could touch up in there, near it, into this consolidation. I much stronger feel that we probably stay in the 90 to 100,000 on the rally. Now, that's going to get people hopeful. Oh, this correction is done. 4-year cycle's busted. We're not going to spend 12 months consolidating. It's like 364 days, really. So we topped out back here on October 6th. And if we spend 364 days consolidating, that puts us somewhere down here, making a low, somewhere around October 3rd, 4th, 5th, somewhere early October. Now, because we're all humans, some of us may front run, even subconsciously, the bottom. We could make the bottom earlier. This whole thing could go faster. We could actually rally up into, like I said, into May, flush it down here, somewhere in the $30,000 to $50,000 areas where I plan for it to bottom myself. So after we do this rally, we'll probably get a big flush out, bum people out, make a lower low than the low we just made, and that'll push prices down. Once we sufficiently bum everybody out, everybody thinks that, God, what did I even get involved in crypto for? We'll make a bottom, just like we did in 2022, and then we'll start on the next 4-year cycle rally. It's just kind of the cold, hard reality of this whole thing. And as you can see right here, we're kind of working on a watermelon seed squeeze. These are notoriously unreliable. That doesn't mean that we won't make another lower low right now. That's entirely possible. I just don't think we're pushing down here right now. Now, flip side, it's completely possible that maybe we don't do a 3 or 4 or 5 month rally. Just go ahead and finish this up right now. I'd love to actually see that. Just finish this correction up now, rip the Band-Aid, and be off on the next cycle. So it didn't have to stick to the 4-year cycle, but it just seems what's most likely right now. And this 1, 2, 3, 4, 5. That's probably an A wave correction. Probably do a B wave, 3-wave retrace. Little baby A. Little baby B. Little baby C. And then we'll do that 5-wave drop C. That'll get the lower low than that right there. That's just likely what the pattern's going to be. Wasn't quite this clean before. Over here, if we look at the last cycle, it just kind of went down 5. But really, it actually broke down to, this was the A wave. That was kind of the B wave. And then this was the C wave. So proportionally, not quite as clean. And we could see that this time. Although the initial drop was pretty deep. So we may have a more balanced drop. See, this did an initial drop, a 50% retrace, and then proportionally, we got a much larger C wave on this one. Actually got near the 1618. So if we were to do the same sort of thing on this correction, here's the high, here's the low. If we retrace 50%, put us right up around 86, a little light. Thought we would poke into the 90s at least, but could just rally to 86 and then could have that bigger downside. And if it proportionally kind of matches, that would push us right down in there in that $30,000 area. That's why I say that. That would be the A, that would be the B, and then that would be the C. And that fits, those proportions fit with that correction right there. This correction right here, pushed over in time. You'd be like, well, what about the time before that? They're never all perfectly exactly the same. This one a little more volatile, a little more violent here. An A, B, and a C. The C a little less clear on that one. A little less clear. There was the initial move down. Here was the retrace. And that one was much more balanced. That's kind of what I expect this time, is a much more balanced. A speedy initial drop. A recovery. And this one on the recovery got close to the 618. And then there's the proportional drop. That's kind of what I expect to see this time, because it's just the classic correction. Absolutely beautiful correction. So we're probably not done yet on the downside. We're probably going to make a lower low before we're done. A lot of people don't want to hear that. I actually started selling some puts on IBIT. IBIT is BlackRock's Bitcoin ETF. Been selling puts in the mid 30s, all the way up to 37, because I think we're going to spend that time, the next, couple months, actually rallying a little bit. And while this chart is incomplete because we don't get candles, the candle maker is not open on Friday, Saturday, Sunday. Get my days right. Saturday, Sunday. We don't get those Saturday, Sunday candles like we do on Bitcoin. So a lot of times I do watch the underlying chart for clarity. But we're likely to see some sort of retrace like this, back up to the 40s, maybe 49, maybe 50, maybe even 60, before we see that next downside move. That provides opportunity to play here, even if we consolidate here and then dip on off. That gives opportunity. Now, what if it proportionally was kind of the same? First move down. Next move down. Put us right around 20 to 25. If I'm playing in the 30s, 25, not really that much underwater. And from there, we're likely to come all the way back up having a cost basis down around 25, rally back up into the possible 100, that'd be pretty sweet. So I like to, just a small allocation, cash flow it right now. Selling puts, willing to buy the shares. If I take the shares, sell upside calls. If it goes against me, still sell upside calls. Can't do this really with any other instrument. None of the other ones are as liquid as IBIT. None of them, IBIT now has 3-day-a-week options expirations. So when I did this last one, I did it for Wednesday. When I sold this 37, I sold it for Wednesday, as in today's Monday, Tuesday, Wednesday expiration. And then I can roll in Wednesday and look at rolling out to Friday or even next Monday. Gives you lots more options on the options. It's pretty interesting way to make some money out of crypto in its funky state that it's in right now. So I don't really expect it to bottom out till sometime back here in October. That's just the expectation I have. And as far as one of the better looking charts, I was talking about Bitcoin Cash. Now look at that. We're sitting. We did this big correction back here, and we're just sitting, consolidating right on the 618. That leaves opportunity for this, and it poked through the downtrend highs to come up here to the target around 2400. Why would it do that? I don't know exactly. Like, there's no reason except the price kind of supports it doing it. One that I thought was interesting that didn't make a lot of sense for it to do was XMR right here. Now, this is one of the only truly anonymous cryptos. They did talk about Bitcoin blockchain, and you can go in and track the transactions and all that sort of stuff, and it's a big CIA tracking thing. But this one, XMR, it's actually anonymous. The whole chain's anonymous. The wallet sizes are anonymous. The transactions, they're all encrypted. You can't just trace them. Lots of people trying to figure out how to trace them because, well, it's anonymous. And for a good long while, I talked about this thing was set to rally up to 600 to 700 area. What did we do here just recently? Pop to the target. Now we're on this retrace. We want to see it hold in here, hold some support, and then we can go even higher from here. And it looks pretty strong. This low, this high, provide a support zone right in here. If we can hold that and bounce, that provides a much larger upside for this anonymous crypto. Now, there's probably some others out there. This is the only one that shows up in the top 20. It's probably the only one on here on the top 100 page that's truly anonymous. And you can say, well, they figured out how to do X, Y, Z, but the other problem with this, though, is you can't just go to Coinbase and buy it. You've got to go to one of these other exchanges like Kraken or KuCoin or one of these other places to get the coins. The United States and the regulations, they don't want you messing with a truly anonymous crypto. So the KYC requirements and all that keep you from getting a piece of XMR. So it does make it more difficult if you're trying to get a piece of it. It does make it more difficult. And as long as Bitcoin goes down, Bitcoin Cash just floats. It's interesting that the difference there. Bitcoin Cash holding up well. It has miners. It has a whole ecosystem. I mean, it basically runs just like Bitcoin. It just there was a fork in the road, which Bitcoin changes their code, and this thing that blows a lot of people's mind is that all of it's on like GitHub. It's all like public repos and stuff like that. BitInfo charts is one of my favorite places to compare cryptos. Now, they don't support all of them, but you can have Bitcoin and Bitcoin Cash on here, and you dive down in here, the GitHub releases right here. Like, they just put the code. Like, you want to see Bitcoin's code, you just go look at GitHub. If you don't know how to read it, you just ask an AI to read it to you. The last time they updated the code, the last release, right there, January 13th. Look at Ethereum, the last release on Ethereum. Funny enough, January 13th. The last release on Bitcoin Cash, January 9th. These are all actively being improved. And everybody says, well, you know, it would just take one person changing the code to change the 21 million, but that's not the way it works. And it's not even the miners would have to change it. You know, everybody thinks, oh, well, the miners control it. You know, they mine it and they control it and they control the supply. But it's bigger than that. If you want to have a vote in the supply, you just go download the Bitcoin software and run it. And then you don't have to mine anything. You're a validator on the network. You can validate every transaction that's ever been and participate in the current transactions, but you don't have to be a miner. And in order to change the code, everybody that's running the software has to agree to change the software. So that's everybody. That's not just, you know, there's actually millions of other validators on the network that aren't mining. So it's not just the miners, but it's all the validators. That's the thing we don't talk about. If you wanted to have a vote in the network, you just go download it and run it. You can run it on a cheap laptop that has enough hard drive space to download the blockchain. Gotta have about half a terabyte at this point to download the entire blockchain. Just gets bigger all the time. Bitcoin Cash, as you can see, much smaller blockchain. Essentially runs the same sort of way. Craziest stuff. Ethereum, different system altogether. There's no universal way for crypto to operate. Now, for a lot of years, I've said, you know, everything says, oh, it's just like Bitcoin, except Bitcoin kind of fixed a lot of things. They have a couple of problems, like transaction throughput is a problem, but as far as it's never been actually hacked, it has always just kind of worked. Like, what are you improving? It's the most valuable crypto, so what are you improving? There's nothing else that's ever actually competed with Bitcoin and its value. So thinking one of these other coins is going to come disrupt the throne by doing something different is maybe an exercise in futility or flawed thinking. No, coming up just last week, Elon announcing that within the next week or two, we're going to see X rolling out with native crypto support. So that's another fundamental boost to crypto, and whichever cryptos that they support, maybe possibly could have some upside to it. Also, Trump Media announcing that they're going to release a crypto.com coins ETF where you can get staking rewards. And this one, while beat down, is not absolutely horrible. Potential double bottom here. Did reject off the 618, so we got to see if we're going to push down lower low or if we're going to hold this and push on higher. This move right here looks a lot like a diagonal. When diagonals complete, typically they return near the bottom before they go on the next leg. Now, a lot of crypto looks really, really bad. Polygon, the namesake of this is the coin that Polymarkets runs on. Sitting here at all-time lows. Not really great. Solana, supposed to be like this awesome. Everything is awesome. Broke out to a new all-time high and then 3-wave retrace here. So, looking for this thing to hold. If we can hold in here. I'm not sure we're done yet. Like that move down, that move. This could need a little bit lower, possibly down in the 50s before we embark on the next move. But that looked like potential 5 up. This looks like a 3-wave retrace. This could take out to October before we complete it. If we stick with the rest of crypto, and then this sets this up for a much larger potential upside. A lot of tokenization has been discussed, taking place on Solana. Solana could see an upside, something like this. These kind of prices. So picking it up down here at 40s could be a big opportunity. But we're talking years out, not this isn't a play like this week or next, this isn't going to play out like the next 6 months. So crypto's the most volatile, most kind of skewed up market, if you want to think of it that way. It's a brand new asset. Everybody says, oh, it's the new gold. It's not the new anything. It is its own independent asset class, brand new asset class that we've never had before. And a lot of people don't think about the fact that there are now 34 million of these babies. 34.27 million. And we get hundreds of thousands a day cryptos coming on the market. Because Solana, good, bad, or ugly, created the ability to roll out a new crypto pretty darn easy that sits on the layer 2 chain of Solana. Good, bad, or ugly, they reduced the barrier to entry. So now we have an explosion of cryptos, and 99.999% of them going to be absolutely garbage, worth nothing, because there's no utility in a coin that has no purpose. So some cryptos have purpose. I like to stay kind of in the top 100. That does kind of rotate out. And some of them that have real utility. The tokenization is real. We're probably going to tokenize the stock market. That's probably going to take place on Ethereum and or Solana. Probably. It's the most likely right now. You can be like, well, this has got some awesome technology, and they've got this and that and the other. And we've got, these DeFi things. We've got the, tokenization of the real world assets and all these things. But really the big winners here, Bitcoin, Ethereum, maybe Solana. Stablecoins are good, but they're not going to make you any money holding them. You've got to go to some sort of place where you can get yield off of these. Doge, I'm not sure it's ever coming back. Lots of people thought Doge for $1, but the inflationary aspect of Doge is just too much for it to overcome at this point. It'll probably get a spike if Elon includes it on X, but I don't know. And, if our Bitcoin Cash coming in here, number 10, it does have a nice chart, and it holds up really well. Most of the supply is on the market. It is a fixed supply, just like Bitcoin without the cash, Bitcoin normal. People say, what about Cardano? What about Hype? What about? We can talk about these all day. Every cycle, Stellar Lumens does thousands of percent rally and then goes back to the bottom. Avalanche was what Fed now was going to be built on, but then that project halfway got regulated out of existence, and now we've only got 50% of the supply in the market. And I don't know. That one may not go anywhere. There's lots of things you could make money at. Meme coins are still in the, big meme coin. 42069 is the number of coins they produced. It's a big joke. Looks like somebody's burnt a little of the supply. It was 42069. That's how many coins they produced. There's a lot of jokes in crypto. People just throw spaghetti at the wall to see if it sticks. When we look at the total market cap, we basically came up to the target. The lofty target up here. Didn't hit it. We're working on the retrace. The retrace would probably be down. Back down this zone. Set up the low. Set up the high. Back down here. Around 1.7, 1.4 to 1.7 trillion down here. That's all of gold has made or lost that in days. They're crazy enough with the swings in gold. Maybe seconds. So we've seen gold just flying around, higher and lower, adding trillions of dollars. Silver adding trillions of dollars. But then Bitcoin down here languishing. That's total market cap. That's the total value of all crypto. Probably going to go through the next pullback before we can go higher. Take out Bitcoin. Chart still kind of looks the same, but it didn't hit any upside targets. Still consolidating. Looks like 5 up and a retrace. Total 3, taking out Ethereum and Bitcoin. Picture starts to look a little more grim. And then others outside of, take out the top 10. And this chart looks kind of like a head and shoulders with potential to come back to the lows. This is why I say be careful getting outside of the bigs. Be careful. This chart can easily take a spill right back down near the lows. So outside of the top 10, money may evaporate. And that's kind of my general broad brush crypto update for the day. Don't have any awesome, hey, I'm not going to hype it. I'm not going to hype it. I do these updates. I did an update yesterday. Put it out there for my members. It's in the Crypto Power Plays channel. And be careful out there. It's the most volatile asset. We'll be back with the regular market update tomorrow. Check out what's actually moving, shaking, moving and shaking. The futures are open today. It's a little mixed bag. Got ES up a little bit, NQ down a little bit. We got gold down a little bit. We got Bitcoin just turning around a little bit. So mixed bag. Be careful out there, everybody. It's your money. We'll be back tomorrow. Same bat time, same bat channel, 9:15 tomorrow. We'll look for some opportunity.